Hello everyone, this is Jimmy Singh, broker owner with Supermax Realty. Welcome to my channel Real Estate Edge with Jimmy Singh. In today's video, I would like to discuss the changing landscape in our rental market moving in 2026 and what are the three factors that impacted our housing market rentals in 2025. So, first major trend that is impacting our current rental market is immigration. Immigration was the major driver as new immigrants made up a large share of renters, encouraging lot of investors, including mom and pop investors, to buy and rent out their units. And Canada's immigration policy represent the most significant variable that has affected our rental market in 2025 and beyond. So this year, our federal government decision to reduce the immigration targets already have produced noticeable impact on our rental demand, especially in student housing. So I was going through some stats. For example, Fanshawe College in London, there was a massive drop in international students in 2025 because of the federal cap on student permits. And according to some projections, there is decline of 64% less students coming this year versus 2024. And it has forced the college to suspend 40 programs and suspend 35% of this workforce. In September session alone, there were only 4,200 students that came and attended from abroad Fanshawe College versus 8,500 enrollment last year of international students in September. If I talk about Western University, so international student application this fall of 2025 declined 5.4%, and federal government permit cut was approximately 10%. So this is seen all across Ontario. So if I see Conestoga College in Kitchener, they have also experienced significant decline in international student enrollment this year. So in spring session of 2025, instead of 22,600 students which came there last year, this year only 8,500 students enrolled. And if I talk about Mohawk College in Hamilton, it has seen substantial 95% new student permit decline in last 2 years alone. So overall, there was a research done across Ontario colleges, and they said 23 out of 24 public colleges, they reported reduction of approximately 48% of enrollment. See, folks, when international students come in particular city, housing demand rises, housing prices rise. Why? Because let's say 10,000 students come in a city, so investors buy those properties to house the students, and all those housing don't come on MLS system for sale. So those houses are taken away and inventory decreases and the house prices rises. So these now trends are changing and it is impacting our housing rental demand, increased vacancy rates and softening rents. There was another report put forward by Canadian Mortgage Housing Corporation, and they have reported vacancy rates across Canada jumped 3.1% across all the urban markets. In British Columbia, the vacancy rates were 3.5%. Ontario, the vacancy rate is hovering around 3.2% in purpose built rentals. And if I talk about Alberta, the vacancy rate increased to 4.3%. Alberta certainly has seen a boom in last couple of years, especially in construction field, and there's lot of supply building up there. Saskatchewan rental vacancy rates are sitting at 3.4%. The lowest vacancy rate in Canada was noticed in Prince Edward Island, 2.1%, Newfoundland Labrador, 2.1%, Quebec has 2.7%. So, what's happening is, as per IRCC website, international students' arrivals decreased 59.7% till August of 2025. Temporary foreign workers, their arrivals fell 48.6% as compared to August of 2024. So these reductions have impacted markets and cities with high post-secondary and international student population across Ontario. So market is especially dependent on these students. Their demands are, with the declining demands, they are seeing significant rent reductions. While market driven by domestic migration, employment growth, they are more resilient in terms of vacancy rates and rent declines. So if I talk about example London, so London area has seen 2,500 purpose-built rental units completions from January till September of 2025. Greater Toronto, Hamilton area, it has a projection of 31,396 completions for 2025 of condominiums. And all across Ontario, according to some reports, we will have 50,000 purpose built and condo completions in the year 2025. So these high number of completions will be contributing especially for rising vacancy rates, softer rental market conditions, and I have also noticed some of the developers who were unsuccessful in selling their pre-construction condos or townhouses. Now they are taking their standing inventory and converted into rentals. Other interesting facts I like to share is in 2025, I have noticed because of the softer resale market, the ratios of sales versus rental have shifted. For example, in earlier 2000s, 60% reported transactions on Toronto Real Estate Board MLS system in any given year were sales and 40% were renters. And this year, the transactions reported on Toronto Real Estate Board, which is the biggest in Canada, they reported 40% sales and 60% rentals. They make all the transactions. So, all in all, right now we are still seeing some strength in rental market. Rents are growing in certain parts, especially in Alberta, Calgary, Edmonton, because of the strong interprovincial migration. Their energy sector is recovering, and Alberta has strong landlord friendly regulations. So in short term, I can see slow rent growth, high vacancy rate in near future, and because of all the migration cuts, international student caps, and all. And for all the landlords in Ontario this year, there's a maximum rent increase cap of 2.5% of all the rental control buildings, especially the buildings which are built prior to November 15th, 2018. You can only increase your unit rents 2.5%, and any unit occupied after that day, they are not under rent control, so you can increase the rent the way you like. And the investors who are successful long term, I think they should be able to adapt in these changing environment and build up their portfolio to withstand all these dynamic changes in our marketplace. So if you're a landlord anywhere in Greater Toronto area, Kitchener-Waterloo, Hamilton, London, St. Thomas, and would like to rent your property, want to do due diligence, tenant screening, give our team Supermax Realty a call. You can give me a call at 647-961-2639. Thanks for watching. I'll talk to you soon. Bye-bye.